Okay, folks, welcome to our technical analysis of the price of gold on this Saturday, October the 26th, 2019. This is Bob Desmond over at the Contrarian Trader, and welcome. We are going to go over a few charts of gold. We're going to begin with the quarterly chart, then monthly chart, then weekly chart, and then we'll leave off with the daily chart. Why do we conduct our technical analysis using multi-time frame analysis, meaning multiple time frames to identify the direction of an individual stock, commodity, in this case gold? The reason is that we want to get a feel for the health of the overall trend. Where have we been? Where is resistance? And where might we be going in the longer term? So we're going to begin our technical analysis of gold off with a quarterly chart of gold. And you can see that on a quarterly basis thus far, and the first month of Q4 2019 is very close to being in the books, and that we are up 2.20% on the month. So respectable, but no new quarterly high yet. But we still have more than 2 months to go in this quarter. You can see the value of using the quarterly chart. And folks, before I continue here, I meant to say, can you please hit that like button, subscribe button? I do go live on Sunday evenings, live to discuss Sunday Night Futures Live. If you're watching this on YouTube, click the subscribe button, click the bell button to get notified of when we do go live or when I do publish new content. If you're watching this on Twitter, I do live stream to Twitter, Facebook, and Twitch. I appreciate you joining in, and I look forward to engaging with you. And yes, it's an open chat. You can ask questions. All right, so back to the quarterly chart of gold. You could see that we broke out here the April quarter of 2019, and ever since then it's been off to the races. We did hit a bit of resistance back here in the July quarter as we rallied up and into the third standard deviation Bollinger Band in red. We backed off as one would expect. However, we have not put in a new quarterly low. We are threatening to take out new highs, and with all the QE, all the money printing out there, the path of least resistance, in our opinion, for the price of gold is to the upside, at least from a quarterly view. Now let's drill down. This is our top-down approach for technical analysis. So gold on a monthly basis, a monthly time frame, you can see we did in fact put in a new monthly low, the low of October 1,465.00, the low of September 1,470.50. However, we have rallied back. We did tap resistance last week on this monthly chart. No breakout yet. You can see that the prior month we had a bearish key reversal on this candlestick pattern, which would imply that we would get lower lows, and we did. However, the bullish story is that we did not break down to go even lower on the week last week. What we did is we reversed to rally and rally back above the 1,500 mark and close there. Most importantly, we closed above 1,500. That is now psychological support. Our stochastics pulled back. Good stuff. They're not flattening out and hooking up yet on a monthly basis. I think that's going to happen. That's just pure speculation on my part right now. Volume thus far this month, think about it. Only a couple of trading days left to go in the month as I make this recording on Saturday, October the 26th, and we have volume that is well above the moving average here in red. So on a monthly perspective, a monthly time frame, the chart of gold is looking very strong. Drilling down to a weekly view, you could see that after closing up on the week at about 0.75 of a percentage point, we remain in a consolidation range. We were higher. We were rejected at the upper band of resistance at the 1520 mark, nearly 1521. And that is because you saw money leave safe haven assets, bonds, and gold, and they moved into the stock market. Now, we did begin buying stocks earlier in the week last week. We did add more in the back half of the week on a continuation breakout. I'll go over those positions with members on the week ahead commentary, which will be coming out later today. Back to the weekly chart. Beautiful consolidation here. Now, volume on a weekly basis dropped off. So what this implies to me is that we could still see some volatility within this wedge formation. Looking at the Stokes, they're giving the signal that they may be attempting to flatten out here. And on that flattening out, we will draw our rising lower band of support and expect gold to hold that support level on a weekly basis, or else we know that the gold is in trouble. Right now, I'm not expecting that. I do expect more volatility here, a continued test of the 1500 level, and of course, a continued test of this declining upper band of resistance. When would we plan on adding to gold or opening up a position in gold? On a rally up and through the 1520 mark. And we will also be looking to add to our very large gold mining stock position, which is what we're using to hedge our stock market positions, because I'm very nervous about buying stocks at these elevated levels. And I'll discuss the stocks that we like into the new trading week on best stock charts for the coming week. So if you'd like that, there is an email address below in the description area. Click that link. It'll take you over to a opt-in email form. We hate spam too. We do not spam, and we will send you out best stock charts for the coming week, and you do not need to be a member. Now, if I didn't already say it before, volume dropped off. I believe I did say it, but I'll repeat it because it's important. Price and volume action matters, right, folks? So we want to pay attention to volume, and volume did drop off on the price of gold last week, and that is a bit of a concern, leading to a concern about more volatility here in the gold market. Leaving off with a daily chart of gold, we did begin to break out on Stokes. We have broken out on RSI. That breakout occurred here on the 23rd, and we also broke out on Friday above the upper band of resistance on a daily basis. My concern here is that we closed well off the highs of the session. We had a very strong morning at the open on Friday. However, money moved into stocks, taking gold down. It was the risk on trade. So I would expect to see a continuation retest of 1500. Shorts are going to try to take it down below it. The gold bears on the COMEX will try to destroy gold, not in physical terms, but in paper terms. However, given the macroeconomics and the Federal Reserve's insistence upon expanding their balance sheet, well, then it would appear to be a foregone conclusion that at some point in time in the very near future, we are going to see gold break out in a very big way. And when we do rally up and through 1566.20, last seen back here on September the 19th, not too long ago, it's going to be game on. Back to the monthly chart for a moment. It's going to be game on as we break through monthly resistance to challenge these resistance levels up here. Resistance level number 1, 1790 the ounce. Resistance level number 2, 1523.70. Once we get through those two resistance levels, we are at new all-time highs. No overhead resistance to deal with. And you may be saying, it's probably not going to happen. It's so far away. Folks, gold priced in Aussie dollar terms and in Canadian dollar terms has already made new all-time highs. So when we do add to our gold mining trade, or when we do open up a gold trade, or when we do add to our silver trade, we will be sending out alerts to our members. So please join me tomorrow night, Sunday Night Futures Live. And there's a poll below if you watch us on the blog or on YouTube. If you could take that survey, we're trying to gain an insight into what our viewers want, what your experience levels are, and what your pain points are, because I'm developing a course and additional commentary around those pain points so that you get value out of watching these commentaries. And with that, folks, everybody enjoy the remainder of your weekend and have a profitable trading week next week. Be well.